Hey guys, Craig with Capella Mortgage here. I'm looking at purchasing an investment property and I wanted to talk to you a little bit about what I look for when I go to buy real estate as a lender. So without further ado, let's get into it. All right, so one of the first things I look for is how am I going to close this transaction? Am I buying it cash? Do I need to get a loan for it? Most likely I'm going to get a loan for it, especially if I'm going to hold it for a long period of time. I don't want to dish out that amount of capital because then it's tied up in the real estate for until I sell the property. So that's what I look for. How am I going to take this property down and how am I going to close it? Next thing I look for is what type of loan product do I need to get? How long am I going to hold the property? Is it a fix and flip? Is it a long-term rental, short-term rental? Short-term rentals, am I going to sell it in 5, 6, 10 years? Because that's going to determine which product I want to go for. The longer you hold the property, typically the lower the interest rate you want to get. So that's where you're going to try to go for your conventional loans or your DSCR loans. And if it's a shorter term property, like a fix and flip, or you're getting it at a good deal, so you're going to hold it for maybe a year or two and then sell it for a profit, then a hard money may be a better option for you. Underwriting guidelines for hard money is a lot softer. They underwrite the asset mostly, but they still want to make sure that you can handle the monthly payment. So you still need to know the income information on the property, the rents, etc. After I've determined what product I want to go for, I figure out how much this is going to cost me monthly, right? What is my interest rate, property management fees, what are the rents coming in, and do the rents cover all of this, all of these expenses? If not, then I have to show enough money coming in from any other source. It doesn't have to be W-2, but it has to be coming in from a new source. That way you can handle this monthly payment, right? Lenders are in the risk assessment business, so they're assessing the risk, and if you can't make the payment, they're most likely not going to give you the loan. Now that you've determined what product you're going for, how much your down payment is, things like that, it's time to determine how much you're willing to purchase this property for. Once you find that out, then it's time to make your offer. You can contact the realtor for the seller and they can represent you as well, or you can find your own realtor and they can represent you and make an offer on the property for you. Or you can do it yourself if you choose to. I choose not to. I typically try to go and use the realtor that the seller is using. It gives them a little bit more incentive to fight harder for you because now they're getting paid on both sides. Buying investment real estate is one of the best ways to build wealth in the United States. You get the monthly income from the rents, okay? You get the depreciation and tax benefits. You also get the appreciation of real estate over time. I'll be putting more videos out on the different loan programs and different options. That way you can make the best decision for yourself, or you can just give me a call. I'll put the number on the screen. And I'm happy to discuss your specific situation and help you decide which program is best for you.